Hi traders, welcome to the Flow Show. It is Tuesday, 26th of August, nearly at the end of summer. It's pretty much at the end of summer here because the sun's gone, and I think it's gone for the foreseeable future, thanks to our good friends in America who have decided to send the remnants of Storm Erin our way. Thanks for that, guys. Much appreciated. Morning, Kate. How's it going?
Morning, Ryan. Yep, all good, mate. Good morning, everybody. Ready for the end of August.
Yep, got a month in to deal with coming up this week as well, amid some other bits and bobs. Right, let's just make you aware quickly. We still have our summer sale on the platform. A nice 40% off subscriptions, monthly subscriptions. You can take advantage of that. That will be disappearing probably next week, I think, after Labor Day. Once that's passed, that sale will be going. So if you haven't taken the plunge yet, now's the time to do it. Get in before we get all this big data coming next week. So jump in on that. Right, let's get cracking into what's been going on while we were having a little bit of a day off yesterday, bank holiday in the UK. Right, bit of data first, and I haven't got my calendar set up as usual. Get rid of that. Quickly, get on that. There we go. Bit of data out of Japan overnight, if I can find it. There we go. Their version of PPI, corporate services PPI, coming in year on year, a little bit softer than expected, 2.9%. Also, one of the Bank of Japan's core measures of CPI coming in softer at 2% as well. Was expected to rise to 2.4%. A little bit of softness there coming in those inflation numbers. Slightly different to what we've been seeing in the main numbers, but still something that goes in the pot. They won't want to be seeing that slipping any further than that. Apparently, the LDP, the ruling party or partial ruling party, whatever you want to call it, LDP is going to finalise its report about the next election on September the 2nd. So we'll be hearing what's coming out of that. I haven't kept up with the election stuff. Ishiba still clinging on, but we might find out when there's going to be various elections next week. The RBA minutes, as usual, not much than what we already knew. The board saw a strong case for 25 pip in the cash rate. They judged some further reduction in the cash rate is likely needed over the coming year, and the board judged the stance of policy was still somewhat restrictive. We had the German IFO data out yesterday morning. That coming in better in some aspects, shall we say. Business climate itself rising to 89 from 88.6, so better than expected. Current conditions, though, that fell to 86.4, but expectations rose nicely. We're expected to drop 6 pips, but ended up going up to 91.6, so a decent bounce there. A little bit different than what we saw in the zoo numbers. Maybe some less brown shoots over there still. ECB's Lagarde says the European economy is resilient, although it's not thriving, and that tariffs may only have a small effect on Europe's GDP. Well, all those GDPs are pretty weak anyway, so not much going on there. And good to see France is still the bastion of political stability around the world. So French PM Bayrou is going to call a no confidence vote or vote of confidence in Parliament on the 8th of September. And various parties have been coming out to say that they won't be voting in his favour. On the right, we've got Le Pen saying that they will vote against his confidence motion. The Socialist Party says, or the head or an MP from the Socialist Party says, I do not see how we can vote in favour of Bayrou's government's confidence. Another smaller party says they will launch impeachment proceedings against Macron on September 23rd. Kay, I don't know if you remember, that's all coming to a head, isn't it, later on this year, both Macron and all the rest of it?
Yeah, and as you say, I always thought that Bayrou he's been trying so often already in the past, and he rarely had support for longer than a couple of weeks. So I think he's taking a big risk there. Yeah, but what are they going to do? I think the earliest. Well, I mean, if it comes to general elections, I think the earliest, if I recall correctly, would be for somewhere June, July next year or so. But yeah, and regardless of what he says or whatever, in just in general, I mean, if you get political instability, especially that most of the parties are not going to vote for him. It can't mean anything good for the French economy as well, on the back of it, because imagine that he gets out, it's going to be unstable for one, but none of the others are, in my opinion, capable of putting one line program in place. It's a bit like in other countries where you have like a scattered opposition, let's say, who amongst themselves can't find one line. So I can't see anything positive coming out of it.
No, and it's worth remembering that France has been in a political mess ever since Macron's own goal in calling an election that just
Yeah,
ended up him losing everything. And
yeah.
I don't even have we effectively got a government. We just got a load of people who might agree on some stuff now and again.
Well, um, whatever he has, whatever he has suggested to do or put in place so far has always ran into stiff opposition. So and no, there is definitely no cohesion in France.
Yeah, I can't remember if they haven't even passed a budget yet.
Might have.
Yeah, and part of this confidence vote is over the budget plan.
Yeah, I
So
think so. And but parts of it, but not the whole one, and not the whole.
yeah. Anyway, it's still a mess, and for want of anything else, it might be something that the euro pays attention to, because that will mean if it goes wrong, they won't be able to pass a budget, and the EU likes it when people pass budgets. Whether they stick to them or not is another question, but markets also like budgets too. Anyway, let's move on from that mess that's going to rumble on for the next couple of weeks. Anyway, we had a bit of data out of the US yesterday. We had some those are building permit revisions, but we had new home sales later on coming in at a healthy 652, better than expected. Was expected to pull back. They're only down because prior month got revised up. Prices, they were down 5.9% from this time last year. These are July numbers. So a bit of softness there. Also, they were, though, up a little bit over last month. So year on year, we're seeing a bit of softness still in house prices, but nothing panicky at all. And the housing market itself holding up reasonably well still too. Feds Williams says the era of low neutral rates appears far from over, indicating that we could see lower range bounds, or whatever they want to call them these days. But then he went on to waffle about how central banks and others shouldn't pay too much attention to neutral levels anyway. Overnight, Trump decided he was going to fire Fed's Cook, effective immediately, according to a declaration he made on official paper, even signed as well, I think. That caused the dollar to have a little bit of a wobble. A right inopportune moment to drop that on markets, not the most high liquidity period of the day to do that. Fed's Cook has already fought back, saying that there's no cause that exists for her to be fired, and she will not resign. And as Mr. Brown pointed out, it's going to be a very messy situation to deal with going forward, because I think there is stuff in the Constitution where he can't actually fire people, but when has that stopped him? So that bum fight is probably going to roll on again today. White House's Hassett says it's appropriate for the Fed to consider a rate cut, and says that Powell's presentation was sound. He says he expects a decision on the next Fed chairman will run out for a few months before Trump decides who he's going to pick. Morgan Stanley, latest to get their Tipex out for Fed rate cuts. They previously saw no rate cuts for the rest of 2025. Now they see 2 coming in September and December. Forecasts, you know what I think of those. Back to Mr. Trump. He's apparently going to do the numbers on the costs of drugs in the US. And he will be reducing drug prices by 1,400 to 1,500% and will also put tariffs on drugs rapidly. So that's one of his next bum fights, as we know, the pharma sector. He's also threatening tariffs on countries with digital taxes, as well as continuing to threaten to place export restrictions on chips. Now, the digital taxes thing is something that's been a big bum fight with Europe. So just as we've had their draft statement, or we want to call it, on the recent tariff deals, now it looks like he's picking another fight with them over digital taxes, which is something Europe is in favour of and have been for some time. But we'll see. I think the last time this came up, they were wavering on whether to go ahead with it, but Trump's making the case anyway that if they do, they're going to get hammered again, and it isn't just Europe that will be hit by that as well. So that's one of the reasons why we're seeing a little bit of softness more on the euro side than others as well. And if you own a sock drawer in the US, or you need a sock drawer, be careful, because furniture tariffs are going to be imposed as part of a national security investigation into lumber. So be careful if you're going shopping in IKEA. Kay, what you make of the year and all this stuff? We're just jumping from sector to sector with all this tariff stuff, aren't we?
An investment into lumber for national security. I mean, what is it? Are the verbs now Chinese spies or so that you find in the furniture? It's quite funny. What do I think about all of this? Well, yesterday on Face, I was already saying, if you look at if we looked at the moves, to just take it back a step to what Powell said on Friday. He opened the box. He opened the box, but I still, and what I said in the room then as well, I still want to see what's exactly in that box, because I mean, if imagine for a second that the September or the early September jobs report comes out positive, where are we really going to stand? Are they still going to cut or not? But yeah, for now, how I look at all this, it's a bit of a difficult question. But as I said yesterday, I mean, we're still in the range, and I also said we went to interesting levels on the dollar when it got sold off on Powell, but then we couldn't get any follow through, because the market and I think rightfully so, is waiting to see if the data are going to confirm what Powell now is hinting. And the rest, as you already said, like wrong timings, wrong time zone. When the markets are driven by within the summer markets are driven by politics, it's very difficult to form a definite opinion about what's going to happen in markets, and that's where exactly I am at right now. And we are in ranges, and we will see whether those ranges hold sooner or later. We could have blips outside because of this, maybe the French situation, the non-deals between the US and the EU. By the way, Akazawa is planning another trip this week to the US to find out what's finally going to be put on paper. So for Japan, it's not a done thing yet either. And that keeps this market top and bottom of the ranges, but in the range.
Yeah, Nakazawa, he's only going over there because he wants he also wants a disjoint communique, just like the Europe did. So not actually a deal put in paper, but he just wants a communique, exactly what it says.
A framework.
That they've agreed to the stuff. So
a framework.
If Europe gets one, he wants one as well.
Yeah, well, yeah. So That's exactly where I am, mate. I mean, it's all in ranges right now, and we need to break the ranges. It would be a shame that the ranges break on a political news. I'd rather have the data tell us where we're at, but we may have to wait next week because even PCE later this week. Most of the propeller heads have already taken their abacus out and know roughly where the PCE will be coming out. So
Yeah.
I doubt that even that is going to be a big surprise, unless we get something. Like today, for instance, we have the consumer confidence. If that would show a big difference, we may see a bit of a move on in the markets as well. But in the meantime, my head is very much in the range of things.
Yeah. Right, over to Ukraine-Russia stuff. Zelensky is going to have a discussion, or yesterday was going to have a discussion with US envoy Kellogg to prepare for a possible Putin meeting. Trump says there could be consequences if Putin and Zelensky don't meet. And he says we'll see what happens over the next week or two, and at that point he'll step in. So we do have a bit of geopolitical risk still developing and bubbling on there. That's pretty much it from the headline front. Anything else you got on the radar, Kate?
Well, just a little thing again about Japan. I don't know if you saw, but they decided, or there are plans to raise their best visa, which is the entrepreneur visa. They plan to raise the capital threshold from let's say $50,000 to $200,000. Because they think that a lot of foreigners have taken the piss and over the past 10 years because they need immigration, but there now we have again a little bit of a hint at how far the Japan is willing to let it go. So it's not yet a complete open country, and I think that may just impact the migration picture in Japan again. They need foreign entrepreneurs, but they themselves think that they don't need too many either.
Yeah, something we need to keep an eye on as well. But
I think so, yeah.
yeah, we'll see if it causes at least cause any outflows or something like that. But we shall see. Right, let's have a quick look at what is coming up today. As Kay mentioned, we've got consumer confidence. That's the conference board number coming out there. Keep an eye on those inflation expectation numbers as well. We had seen the Michigan numbers picking up for the prior 2 months, only to have a little bit of a wobble in the latest report, of which we get the final numbers on Friday. So this consumer confidence, we'll see if it goes the same way. We also get durable goods orders, so which we can keep an eye on for a bit of data, because data is important again with everything going on with Powell and whatnot. Wednesday's fairly quiet. Not a lot going on there. Bit of data out of China. On Thursday, we get a few bits and bobs. Again, nothing huge. We get GDP numbers from the US. I think they're revised numbers anyway from the US. A bit more housing data, obviously jobless claims, seeing if anything's going in the jobs market, although this data will be after the survey period, I think. Not that it's shown anything in the meanwhile, though we did see a little bit of a tick up last week. On Friday, we do get a bit of data out, some retail sales data and bits out of Japan, retails from Germany, again, probably some final GDP numbers, some CPI from France and the like, more GDP, CPI going into the European day, and then we get some GDP and monthly data from Canada. It is PCE, personal incomes and outlays, and PCE data on Friday, but as Kay's said, we've already extrapolated all the bits and bobs to give a close number for that. And then the final, as I say, Michigan numbers late on Friday. So not overly busy. Obviously, next week is going to be a busy one. It's jobs week, and we'll get all the final PMIs and ISMs and all that sort of stuff. And then September is also a return to central bank action, because we get a lot of central banks reporting in September as well. And it'll be the end of summer. and markets hopefully will get back to some sort of normality and a bit busier than some of these lull moments that we've had of late. So a few bits and bobs to keep an eye on this week. Right, so we didn't have a flow show yesterday, so we didn't get much chance to do much of a review of Powell. But then again, it's nice looking at stuff with fresh eyes, shall we say, this morning. So looking at dollar yen, pretty much following yields again. So you can probably overlay this chart on the 10-year yield once again. So we had the last week we had this bid in the dollar going into Powell, likely just shorts taking some money off the table in case he wasn't dovish, and then they put it all back on again. When okay, I've got to ask you. I was in the Great London car park when Powell kicked off. I didn't plan my trip very well. I was hoping to be parked up by then, but was he really dovish, or did he just give the market what it wanted, which was a nod to if the job market wobbles, they'll look to cut?
The dovish bit is that he clearly put, but he actually already did that over the last FOMC. But the market is always suffering from Alzheimer, and they like to act surprised when he says something. But he clearly did put the jobs market in ahead of the inflation. He did speak about the potential that the inflation spike that we saw into ahead in and over tariffs could be temporary, and he did take note of that those job revisions, etc. So he clearly opened the door to September, and the market obviously reacted to it. And being Friday as well, it's probably not blown out of proportions, because I think it was justified that the market reacted in this way, because he was a lot more dovish than he was during prior interventions of his. So yeah, but then again, on Friday we hung around the lows of the dollar, but already we didn't. There wasn't any like late Friday massive follow through. And yeah, as I said on yesterday, I said, okay, now as he opened the box, but it's not a Pandora box. Everything bad going to happen now in the States. That is really the data which are going to tell us. And then the market reminded itself as well about yeah, okay, but inflation is still a factor behind yields remaining sticky. But as I said then, and on Face yesterday as well, it is really possible that we stick in this range until the next jobs report, because now twice now he confirmed that the jobs were the most important one. The thing is, if you look at the number of people in at the Fed who started to change their tack, saying that yes, September could be live. Walla Bowman, but then I think Cook, her latest, well, if she's still around by then, latest intervention was also more on the softer side. I think one or two others as well. It could just tip the scale, and that's where the market says like, okay, maybe they will cut. But then, as I also said on Face, actually on Friday before Powell spoke, is that if he speaks about a 25, or he didn't, but assuming that we may get a 25 bps rate cut, the US is still going to be one of the high yielders in the major land, or at least not joining any of the low yielders, right? So is 25 bps really going to make a huge difference? That is the question to be asked, and that's where we need data to support the rate path going further, because now, as you say, Stanley changed their view, BNP's changed their view, Barclays changed their view. I think, and was it Goldman's also? They see a rate cut at all of the three remaining
Yeah.
meetings, actually. So yeah, we will have to really see whether we are going to get what really the market is expecting or planning for now.
Yeah. I mean, it's been no surprise to see this reaction in the dollar, because as we were saying all last week, yeah, there'd been a bit of reduction in probably by shorts and the dovish crowd, just in case Powell wasn't dovish, but the market was leaning that way already. So he would have to have said something really, really uber dovish to get the dollar, selling off meaningfully. And you look at a lot of pairs, and we just held ranges, and we held recent levels, and we didn't break anywhere new. Dollar yen, we've had moves down to this 146, 50s, 60s area plenty of times before. It was a decent stretch point, and that's what you had to look at on Friday if you wanted to fight it. Where did the price end up? Did it hold levels? Did it not? Dollar CAD, that was another one. Where did it hold? Into 138s, the low 138s. We were right up at 139s. So a decent stretch point. As soon as you hit some decent levels, you see some of these pairs holding. It was a similar picture across the board. So now data does matter again, because to get that, to nail that September cut, we've got to see a weak jobs report or a not overly strong jobs report. I think if we get a 250k and a 4.1 unemployment rate, that's going to catch the market on the hop again, because it's still heavily dovish, and that's when I think we'll see a big old reprice, buying the dollar and yields going up.
Especially now that all those, not all of them, but Musalem and who was it, Kashkari or so, or one of the other ones have told us that the bar for job creation has been lowered that much to 50 to 75k. So the market also will have to reprice their expectations for what is bad and what is a good report, right?
Yeah.
I'd say look more at the unemployment rate than the actual NFP number, because if that for some reason or ticks up 4.4, 4.5, then it's a bingo, I think.
Yeah, I think even if the NFP, if it's 50 to sort of 150k, and the unemployment rate moves instead, the market's going to look at that unemployment rate.
Don't we have more revisions coming? I think so. I think September is one of those months where we have more revisions coming.
I can't recall. I don't recall we get some
Yeah, I think so.
This late. Could be, could do. Who knows? We shall see. They'll be fun anyway. But then that's the other thing. What if last month gets revised again? We get another crappy move, and who knows? So it's all.
He may fire the new BLS boss already after less than a month.
Yeah, exactly. So it could be very interesting when we get that jobs numbers. But it's good for data. Again, as I said last week, this power stuff has the ability to really set monetary policy off for the rest of the year, and this data next week is going to add to that as well. There's not much we can price into September, as much as the market might go that way. I don't think 50 basis point cuts are on the table at all, unless the data wholesalely falls out of bed. That doesn't mean the market can't get too dovish, extremely dovish. That's what it can do, but it's going to indicate what the market thinks for the rest of the year and going into next year. But anyway, that's for next week when we get that jobs data. So in the meantime, we've got a lot of these dollar pairs. We've had these ranges, and now we're sort of back in the middle. As I showed with dollar yen, we're sort of back in the middle of all this big move. And now it's a question of which way do we go for here? Do we see some dollar weakness and we head back down, or do we go up? But all the old levels that you could have forgot about between here and there are now coming back into play. Now things are quieting down. So again, a perfect lesson in when you get these big events, you ignore the tech. I think I said ignore everything within 100 pip range, either side of prices going into Powell. And, pretty much that worked out to a dot in some pairs. But yeah, now we're sort of back in the middle and back to what next, and waiting for the next bit of data. Euro sterling is one that technically is respecting the levels. We tried all week, pretty much from the latter part of last week, to get through this top of the zone 86.70s. We couldn't. We've now broken below the bottom of it, and we're holding below the bottom of it. So that keeps the pressure on down here. I'm still running longs in this one, but I was quick to do some slicing off the 86 level ad that I got in last week. Looking at the chart still from a longer perspective, this is still a pretty bearish signal holding the bottom of this zone, or sorry, holding the top of this zone, because it's stopping us from going back towards these highs. So it's showing sellers are still coming in. So this 86 area is still in the frame, still under the cosh, and still at danger of breaking lower. That's why we need to be above this zone to see us going higher. And the fact we can't get through it again, another weak signal. So there's several weak signals showing why we might not be out of the woods yet regarding this one. And if it kicks off between Trump and Europe, this one's probably going to be affected from the euro side of things more than what's happening in the quid. Aussie Kiwi, that's had a little test at 110, again over all the noise last week. But well, this morning rather, it's had a little test up there. A bit of a failure. This is a next level and a bit of an area. Let's go into the longer one, which is probably a bit better. Which shows we are getting in above 111. We're getting into some of the longer range, the bigger, wider edges of this near 10-year or nearly 11-year range that we've been sat in. So we could have some interesting times ahead, if whether we're going to hold some of these ranges or even if potentially going to break out. You never say never with trading in this one. Dollar MEX, that was an interesting one, and I've mentioned in the chat room today, I've been explaining or drawing comparisons in this one between this and dollar CAD in what we're seeing in building support. So this could be very important because it is a definitive step up from these 1850 lows. We saw that in dollar CAD. We had 3 steps up before it then has gone on to challenge the higher levels and take out some of those higher levels. This one, it's still not out of the woods, but this coming to mid-power and whatnot is still a pretty strong looking signal, but we're not done. Potentially with this 1850, a break is still 50-50 where we go from here. But if this means something, because it was pretty much a double bottom, we got one Friday and then on Monday, that shows you how solid that is. If that is going to be pretty solid, then I would expect we are going to go on and put in a proper test of this 19 level at some point. But once again, it's got to get over all the same old hurdles, 1869, the old fib, and this 82, 85, 86 area up here. A lot of work to do on that still before it can look a bit more like dollar CAD and push on higher. As I was mentioning, bonds didn't quite get down to the 420 level again, but it did have a push down there. We're still finding this midpoint, so this range 450, 420s, a sticky point. As I said, when we had that last 420 test, I expect to see yield struggling up into this area, and struggled we have for the last week or so. So this is going to define what the dollar does, how much the dollar might move over things like data points until we get to the jobs week next week. And then we could be holding below this line if it's a crap report, or if it's a good, strong report, we could be back above and the dollar's going to be looking strong again. So don't take the yields off your charts just yet for watching what's going on there. Kay, I'm going to punch it over to you, nice and early, mate.
Okay. Yeah, let's run quickly over the majors. The euro dollar top and bottom of the range, or the triangle, however you want to look at it, in the space of 2 sessions. Powell, politics, and the short-term market likely already trying to push for that euro to break. And as I said yesterday as well, and on my updates in the room and on Face, it still couldn't get through there. And there's a few currency pairs that we've seen. Ryan spoke about dollar MEX, and which was also quite funny, is that yesterday on Friday, dollar MEX did not manage to get down to 1850, and where dollar rand, for instance, on the other side did test the 1745s, but Yeah, it's still a case for me at least to trade those ranges. And actually, as a matter of fact, Euro is trying to find a bit of a support, perhaps getting back into the into the middle of this triangle. So for me, range. Again, even if we break below on some more truth social bombs or whatever on the digital tax, we still will find some levels here to that may give support around 115.60 as well on the euro dollar. Could just be like we're doing something like this and then coming back into the middle of the range and then again consolidating this range. If you look at it from a wider perspective, if you look at it like this is still a pretty bullish consolidation, okay? So for as long as we don't start breaking those levels and holding below those levels, like here we see a move down and then you jump up again. Even the bigger one towards the end of July when we had that big setback also in risk and equity markets, dollar was bought, etc., etc. And then we started to move back up on the jobs report, etc. It's still in the longer term, it is still consolidating above the real danger levels. Okay, so in the really long term, not a lot has changed. Short term, well, as I said, I mean, you open the box. What's in the box, you know? And for as long as we don't know what's exactly in the box data-wise, politics could drive it one way, the other way, and then I guess that flow-wise it's still going to somewhere come back into the middle and then see what's happening because I don't think the long termers are involved. Now, what we need to also take into account, besides the data that we will have for the rest of the week, is we are in month end. Okay, so there may be a few month end flows coming on starting with tomorrow. Value date end of month. We don't really know because the corporates have not given us the indication every month that they need to go shopping for dollars, but always take it into account that if you see tomorrow afternoon, for instance, a bit of dollar demand taking it lower down, that may be the corporates. But before we get into the real stickier bit of the data towards the Thursday and Friday, and then have the real month and flows kicking in. August is traditionally not your biggest month for month-end flows, but against that, we are still you put that we are still in the summer months, so the liquidity may not be great, so the effect could be relatively similar, I would say. Um, but again, this is the picture of a range, and if you look at the cable, it's less obvious. Okay, this is also this end of July move down. It's maybe less obvious, but we are also in this range. Okay, for as long as we are above 133, given 65.90, the range is intact. Yesterday, as I said, also interesting that we stopped around 135.40, which was the 61.8 of this move down in July, without being able to really put the 135, 85.90, 85.95 to the test. So that is still also in ranges. I would argue right here and now, even if the sterling is struggling with its own issues, let's say, perhaps, just perhaps, because we've seen this bit of pressure on the euro side of things, perhaps this has a better elasticity maybe than the euro right now. So maybe finding the better bit and maybe easier getting back above the midpoint and crawling back its way back up to the 135. But really, we are in a range there as well. Look at what happened on Aussie dollar. Similar thing, moving up around 65, can't hold it, and we are back in that range. And I would argue here as well, we are still back in the underside of the range. We really are going to have to push again above 65, hold it, and then through that whole zone here again that we have been trading so often lately to really say that Aussie is going to push through for in the meantime, respect that range that we have been seeing. Okay, I mean it's relatively as simple as that right now. a kiwi is exactly the same. And then I just wanted to make this comparison. When you see what happened here, and I'm going to go both on the 1 hour, and I'm just going to not going to overlay them, but remember, as Ryan already showed, big support, 1850 on the dollar mix. We didn't manage to get there. But in the dollar rand, the market got shaken enough to go have a look below that triple bottom here, but then also subsequently had a really strong rebound. So if I compared the both of those two, and actually I went back into it on Friday, I closed my Rand Max short, but this is actually looking now better to me than even the mix, because we had this very strong rejection of that tryout, the break below. Okay, so I'm actually today I re-entered my short Rand mix, because I really think that this is a very significant bounce from below those that triple low, where on the dollar mix we are left with a little bit of yeah, it is a bottoming formation without any shadow of a doubt, but the move to get back up is maybe less strong than in the rand for now. But in any case, as Ryan already said, this is also still remaining very bit down here, which um, just illustrates what I was saying about the dollar finding the dollar getting sold, but then finding its footing again. Um, so do respect that, okay? So for the time being, ranges, respect the ranges, top and bottom, and then see what happens with the data. And I would even argue that if politics take it away, and we have seen it again happen yesterday afternoon on the French thing, and then later on Cook, and then later on the threat of sanctions on some European countries if they put in place the digital tax. If politics are the drivers, we tend to afterwards correct those moves right now, because the real market, not us, the real market is still looking for clues on data to drive one side or the other. Okay, gold. You were asking, Deresh. Look, the spike higher as well, but then even then we also had a little bit over that 70-75. But unable to break the triangle, right? And it's again happening. What is, in my opinion, a bit more supportive now for gold than perhaps in the short term silver, for instance, is all that political stuff, and that is probably going to keep gold in a better situation than silver. But we are barring that Asian time spike, and maybe that was Cook when that happened, probably actually Cook when that happened. But we also still kept around the zone. Okay, so don't go. I am still a tad long, but I'm really not as long as would be if I have a big conviction. I don't have a big conviction. I still think we could continue to trade this triangle, but with this relatively positive compared to other instruments, maybe, that we held the 3350s. Okay, so 3350s, low 3350s, keep those in mind. If we start to break back above 3380 and hold, then we're going to revisit 34 figure 10, in my opinion, but not before. Let it happen, I would say. And there's not too much of use to try and buy it here and go for the break. Okay, and then silver, although the global picture is still a very bullish one, it does seem that we need a bit more consolidation. We did hit our head against that trend line, like a lot of dollar instruments and pairs, and we are coming back a little bit. It is still bid, but now we are testing this 38, 25, 50. As I also said on my daily update, it could be that we need some more consolidation as well. And we look at this traffic zone here down to 37.65, whatever. It is possible that we need a bit more here as well. So basically, similar thing as in as in all the other instruments, but it does feel like maybe silver, because there may be a little bit more uncertainty on anything positive right now. Could, in my opinion, consolidate a little bit further. I'd love to see it down here to start adding to my greatly reduced long-term longs again. From here, I'll probably start to add there. I think for today, Ryan, I'm kind of done, mate. Yeah, I wouldn't even want to discuss anything in Swissy. We're back into that stupid and miserable range on the euro Swiss. So whatever happens on the dollar Swiss is probably a result of what's happening on the euro dollar. Back over to you, mate.
Thanks, mate. That's one of the first things I noticed was dollar Swiss trading at 80.60.
Yeah, yeah, man. That's so yeah. Oh, yeah. And the market tried, the market tried. We tried 80 and a quarter. We tried 81 and a quarter, but no.
No, back where it's nice and comfortable.
Exactly.
Yeah. Thank you very much, mate. Good stuff as always. I've got yet another holiday coming up for the rest of the week, so I'm disappearing from tomorrow. So again, I'll leave you in Kay's most capable hands. And have a great rest of your week. Have a great day. We'll both be up on Face later, so you can catch us again later on. Otherwise, have a good one and stay safe, traders.